Yo, good morning, everybody. If y'all could give me some feedback real quick, do y'all hear music in the background? I don't know how loud it is on your end. If y'all could let me know, that'd be great. I'd appreciate it. If it's loud or not. Just let me know in the chat, and then we'll get started. Uh-oh. Bit rate. It's mild, so you can hear it. I know it's probably gonna be different if people have headphones on and whatnot. Hope I don't get hit with copyright. I mean, it says it should be good, but we always listen to music in my private group, so I want to see if YouTube can not be ridiculous. But welcome, everybody. If this is your first time being on live with me, we do this every week, 2 times a week, every day in my private group. But we have a Sunday prep call, of course, like you guys are probably aware if you've been here for a while. And then every Tuesday, unless something happens, we're live on YouTube, live trading, right? So yeah, again, welcome. We do have a lot of chaos happening with Iran. So I'm kind of curious to see what's going to take place. Hopefully some good things come out of it, right? Because it's kind of crazy, but you know, regardless of what happens, we'll be able to find something, navigate whatever comes our way. So we got, turn this thing off real quick. All right. So we do have a rejection block here. Prices reaching towards the level that we wanted to see it reach for. Okay. So this is the yields. The importance of the yields, as I talk about every Sunday, is, you know, the dollar is influenced by this asset. And the other assets like foreign currencies and indices and commodities like gold and silver, they're impacted by the bonds. Oh, whoops. Let's see. Okay. So yeah, that's this asset. So because this asset's going higher, because the yields are still going lower, I think this X one's a little too much. But yeah, so because the yields are going lower, because the bonds are going higher, that's going to influence the indices to want to go higher. So that's a big part of our analysis, and the reason that we're continuing to push price higher and not really have too much pushback from it, not too much doubt over it. We're at all-time highs. We're just continuing to push all-time highs. So that's what we're going to continue to do as well. If price is going to keep going up, any retracement should be looked at as like short-term in nature. Okay, you shouldn't be thinking that you're going to pick a top. It's retarded. There's really no reason to. You can, when you get better, you'll learn how to do it, but it's not even required. So you shouldn't even be aiming to do that. You should just go off what it's telling you, right? And use what we teach here. Use what ICT teaches to determine bias and narrative, and just go with the narrative. Don't go against it. So this was potentially going to be an intermediate term high. I wanted to see if it was going to be extremely weak to hold this right here, because it's a high right here, lower high to the left, lower high to the right, going into a fair value gap. So it did take that. So now it seems that this, for this time frame, is now going to be the intermediate term high. And then once it breaks down, forming this intermediate term high, this high here becomes a long-term high. Okay. For right now, it's intermediate because it's in between this. So we got higher high in the middle, lower high to the right and left. So that's an intermediate term high. This here is a long term high. Once this low is taken out, that solidifies this as a long term high. So when you break it down, because price is fractal, every time frame has its own long term, intermediate, and short term highs. Obviously, the higher time frame ones keep you locked into the actual structure and what's going on, like overall. But this here, given that this is the 2 hour chart, if this high stays intact and we leave this lower high and this lower high, again, this higher high here is the possible intermediate term high now. So if this gets taken out, that's what turns me into a buyer for the dollar. Otherwise, if this just breaks down and takes this low out, again, that'll stay an intermediate term high and this becomes a long term high. Okay. So whenever you're bearish or bullish, in this case, bearish, uh, intermediate term highs should not be taken out. They should stay intact. Okay. And again, to keep it super simple, right? From what you guys have probably seen in ICT's videos, especially episode 12 and 2022 model, he introduces the idea of intermediate term highs, long term highs, short term highs. Well, to identify and keep it as simple as possible, you want to identify the intermediate term highs. Because if you can do that, you know that if it takes that high, then you're probably wrong. Right? Same thing if it's an intermediate term low. If it takes that low, you're probably wrong about it going higher. So it's just another tool in the toolkit of validation. So if this can stay intact and we break down, we're clearly still closing below this fair value gap on the dollar. We should be able to keep going lower. Unless, of course, it breaks above that. You also use the 3 PDA rule, right? If there's 3 PDA arrays broken against your overall idea, you're generally wrong. ICT specifically says if 3 PDA arrays are taken out, the next thing that gets taken out is your ass. Literally, that's what he says. And that's how you could think about it. It's very easy to remember. And again, intermediate term highs are highs that form inside of fair value gaps that have a lower high to the left, lower high to the right. Simple, right? If you can identify fair value gaps, you can identify intermediate term highs. And again, if there's an intermediate term high that gets the low taken out, so this high forms, creates a failure, and then breaks down below this low, the nearest high above it like this, that becomes your long-term high, right? Easy peasy, right? Super simple, not overly complex. And again, the most significant structure is going to be on that higher time frame. So if you get thrown off on the lower time frame, just focus on the long-term, short-term, intermediate-term highs on at least the 1 hour and beyond. And you don't have to go any further than that. Okay? Or you could use a 2 hour. So this is very important, very basic information, but hopefully you guys understand it. Many people overcomplicate that topic because for whatever reason, the lecture that was done about it was somewhat difficult for new traders. It's a very common question that I get. How do I determine this and that? So hopefully that solidifies that issue for some of you. Hopefully all of you, of course. But yeah, if that's going to be the intermediate term high in here, we definitely don't want to see it get beyond now the 50% of this because that fair value gap should now hold as we go lower. The problem with this potentially is we're in consolidation still. Once we break down through this low, that'll be even better because then we'll have a high, right? Low, failure swing, and then displacement getting below this low creates this as a mitigation block. So instead of in conjunction with the high labeling, you can also have that mitigation block as well. It's also low, high, lower low. So it's a breaker there too inside this larger mitigation block. Okay. Go to the daily chart. You could see that it's more so a mitigation block. High, low, failure swing, breakdown. This becomes your mitigation block. Okay. The low, high, lower low here, that's a breaker. So when price is below this level, it should respect it. But then if it gets below this, you have this and this in conjunction, plus the intermediate term high here. So it should continue to drop. And what do we have to target? We have the lower portion here, which fully invalidates the interest for this to want to go up. That's our invalidation level there. This here, again, if it breaks this low, that's enough. We wouldn't have to necessarily need it to get to here. But getting down to that confirms without a doubt that it's going to be able to go lower, because then we invert this reclaimed fair value gap. Okay. And then it should reject that. And then, we got equal lows down here that are very obvious. And again, that's supported by lower yields. So if the yields drop, I mean, look at the similarity. The yields are dropping, and what's happening with the dollar? It looks like it wants to drop. Okay. Now, if the yields were going higher and the dollar was going lower, you'd have to be kind of cautious, because the dollar may trade into a discount array and then follow what the yields are doing, because currencies of any country chase the yield or interest rate markets of that particular currency. Currencies chase yield. Currencies chase yield. Okay. Very simple topic, hopefully. Right. So this is one of those tools that's very helpful. That's why we talk about it every weekend. And I refer to it all the time, because again, you want clarity, right? You want to know what influences what to make it so you can make a decision that you could trust in, right? Part of that has to do with a heavy reliance on intermarket relationships. And when they're not in sync, that's also telling you something as well. But we're not going to get into that right now. We'll get into it whenever there's a cracking correlation somewhere. But yeah, so if that's the case and we're looking for this to want to dive down, okay, maybe take out these lows. But first and foremost, we got this, we got this. Okay. If that's going to be the case, then we're going to want to see foreign currencies go higher, which we see, and we got clean highs up here. Remove some of this noise in there. We got SMT at the lows. Okay. So SMT at the lows. We got this weekly fair value gap holding in price. We got the wick midpoint here being respected. Okay. We got an order block being created. We have a low, high, failure swing. This is a mitigation block here, right? This up delivery, right in this level, right there. That's a mitigation block. Make this a little lighter. Okay. We have this up candle here. So when we drag that over, if this is going to go up to these highs up here, that's going to be our accumulation for a market maker buy model. So preferably we see this get up above this high. That'll create also a low, high, low, higher high, bullish breaker. So this level in here is not only a high, but we took stops there, respected this fair value gap, failing to take out the lows. We got SMT, dollar going lower. So getting up above this high here, coming back down into it, the upper 25% should be used as a sensitive price point for bullishness. Okay. So we're going to stick to that until proven otherwise. It's kind of a mess in here, right? If we get a little bit closer, we can kind of see. Kind of see that we have a high, low, higher high. So that's a bullish breaker in itself. You also have a low, high failure swing there, inversion, plus a mitigation block, right? Low, high, failure swing, break above. It's respecting that upper 25% of these up candles, clearly. So that's what's in play right now. We have failure swings up here, so this should be a low resistance liquidity run if it gets up there. Should be able to fly up there. We already dropped below the Sunday's open price, so bullish power 3. If this is going to end up being the low, should stay intact. If price ends up breaking down and reclaiming this fair value gap as a bearish PD array, and we get below this midpoint, which Oh, I didn't label it. That's a fair value gap. Okay. So if it was to break down below that and get below the midpoint here, this is a bullish inversion. It's respecting the midpoint, right? You see, it's refusing to really break aggressively outside of it. So as long as it stays above this level, right, the midpoint and this low, we already came off a stop run. We have failure swing up here, so that's low resistance. We have low resistance liquidity up here, right? We have this fair value gap up here, okay? So it may want to reach into that. And again, getting up above this level confirms that we're going to be potentially in a market maker buy model with clear equal high targets with bearish dollar, bearish yields, bullish bonds, which should then also not only push this higher, but also push this higher. Okay. And the other indices as well. So think about it. The analysis that we just did took what, 10 minutes, 5 minutes, however long. And we've already delivered what we believe is going to happen in the market, like based on a depth of knowledge that just got spoke about in like 2 seconds, right? And that comes from experience for you to have that conviction behind ideas like this. Of course, it is NFP week, so if a wrench gets thrown in for whatever reason from some headline or whatever the case may be, we'll be able to adjust. We do have equal lows here if it does want to dig lower a little bit, but um, we'll have to see what happens. Okay, it is a shit show, right? It's very back and forth, very nasty. So we got to be cautious, right? We do have an up candle here, midpoint of that up candle. Let me pull that over. We have this daily wick here that we're trading into, so that's going to be significant. Those of you that have been with me for a while know that when there's a wick like this and price is trading into it, it's going to be very significant for us to see how this candle ends up closing. Because if this is as far as it goes and we end up getting lower, this will have formed a fractal high, and then we may want to reach down a little bit further to a discount. But we have a large wick here, no gaps in here for the most part. This wick here, it's respecting that 25%, 25%, and we're closing above that. So we're in between this level that could support us continuing and this midpoint of this wick here that may want to turn this into a high. This starts to decline a little bit because, again, it is the second of the month so far. So if power 3 is fractal, it's on every time frame. When you start a new week, a new month, a new day, you got to think about the first phase of that time interval being or like kind of going against whatever the overall narrative is. If it's bullish, we may start to drop a little bit to reach for some discount array. The only thing that I see that's really inefficient, which is not inefficient anymore, would have been down here. And then, of course, this new week opening gap here. But that's really far away. Before we get down to there, we'd have this low, this low, this low, the wick levels, separation there, little volume imbalance, right? We filled this one in pretty aggressively. So sell side, buy side, sell side, buy side, even here, sell side, buy side. So we do want to keep tabs on this. I believe this is a new day opening gap, which created that volume imbalance. Yeah, it's a new day opening gap. It's already marked. So that daily volume imbalance is a new day opening gap on the lower time frame. But again, when prices like this, when we have overlapping candles like this, what kind of condition does that put us in? Those of you that have been with me for a while, when there's a lot of overlapping candles, consolidation, if we're hanging around equilibrium, right? If we're doing any of these things, what is the condition that you can generally label price under? High resistance or low resistance? Low probability or high probability? All right, let me know in the chat. Let me know in the chat. Make sure y'all are awake, right? Low probability, high resistance. Exactly, Maddie. Exactly. So, does that mean we can't take a trade? Of course not. Does that mean we won't be able to find something? Of course not. But we do have to be cautious and we have to lower our risk. You add on the fact that it's NFP week, that promotes crazy volatility, unorthodox delivery, especially after today, right? So these equal lows here do look pretty tasty. It looks like pre-market, they may want to get down into that. You notice how we're bouncing around this new day opening gap. That's what this red box is. So it's been very sensitive to that level, back and forth, back and forth. Go to the regular trading hours. Why is it not? Oh, there it is. So we have regular trading hours gap down here. The close of yesterday was 35.57. So we're up above price right now. So we have a discount. We have a discount gap. Or wait, a premium gap. So 515. The close here was 556. So we're down here a little bit. So the gap is above us. Let me actually clean some of this stuff up that we did yesterday. Okay. So we've got regular trading hours here, here, here. Lots of overlapping regular trading hours gaps. But there's a lot, it's all efficient in here essentially, right? We got large wick, buy side, displacement, sells, displacement sell side, failure here. So it's a failure swing. So buy side and sell sides offered here. Then we got displacement, change in state of delivery. This fair value gap didn't get traded into, didn't have to get traded into because of this wick displacement, right? This creates a balanced price range. This large wick with displacement that takes over that wick, look at how it treats that upper 25%, how it fails to get down into this. That's a part of the balanced price range theory that ICT teaches. Large wicks with displacement, that's a PD array in itself, right? You could just literally wait for large wicks with displacement, wait for it to trade into that wick upper 25, upper 50%, and you disregard any type of gap that's inside that range because, again, this is what you'll see. Why? Because it's a balanced price range. Why is it a balanced price range? Because there's buy side, sell side, then buy side again, aggressively pushing away from that level. So it's done work in there already. It's unnecessary because participation has been offered in that area, buy side and sell side. So price is quote unquote efficient, right? So when you see that, you don't expect it to go through that because, again, it's a BPR. And if it does break that, it's a PD array being violated. So you got to reevaluate. You got to think, okay, well, if that's getting broken, what could it be reaching for? And in that case, say, displacement took place all the way through it. Say we got down below this. What would it be reaching for? The failure swing here. That's what my attention would be gravitating to. Relatively equal, didn't take out the low. That could be low resistance. If it was a sweep below that, it'd be high resistance if it revisited it. This here creates high resistance for price to retrace lower. So if you're taking a short or looking to short into this range, you're trading high resistance. Anything that is against the higher time frame narrative can be classified as high resistance. Now, does it do it every single time where it's untradeable? No, right? Sometimes there'll be very short term, very close equal lows that price just wants to tag before it goes higher. But the expectation in terms of thinking when you see stuff like this, balanced price ranges, counter trend, PD arrays that are opposed to the narrative overall, all of that can be classified as high resistance, like I taught recently. Okay. I gave you guys a very non exhaustive list of criteria and things to look for that can highlight high resistance or low resistance, right? You don't got to overcomplicate it. Okay. So yeah, and if you guys got questions, of course, let me know. But these equal lows have been taken. We're failing to get, through this. So again, this is an intermediate term high here on the dollar. A long-term high sits in between two intermediate term highs. Okay, it's another thing about those labeling, right? The label effect. Um, this drop down, this high right here, in that moment, right? It could have potentially formed a intermediate term high, right? Lower high to the left, lower high to the right, going into a gap. But it failed. Ran up above the high, took out the highs, created an intermediate term high here. So this is a long-term high. And if it gets taken out here, that's solidified as a long-term high. And this is an intermediate term high. And as long as that stays intact, we should not see price go through to the buy side. Again, this tactic is used in other assets too. It's not just, the dollar. So it's specific to that. It's used in everything. The logic that I've just described, that's how you identify them. And the importance of intermediate term highs is something that can't be understated, because if you can identify that intermediate term high, you're able to then, from that point, look backwards and forward and find your short-term and long-term high as well. Okay? So again, just take some practice, but hopefully what I just mentioned makes sense to you guys. It's very important. So again, we're inside of this range. We have a low here, fractal low, and a fractal high. We got, let me see. We got equilibrium right there. So again, what did I just say about low probability, high resistance, right? We're not only overlapping candles, but we are also resting at the equilibrium of this current range that we're trading within, which is this low to that high. Okay. Why not this low? Well, you could use that low, but again, we have a BPR down here, so I don't expect it to go down there. If it does, we'll obviously have to, analyze that premium and discount. But this right here took out this candle's low. If we go to the 4-hour chart, 2-hour chart, right, we got sell side taken in here, and then buy side taken. And now we're inside this low to that high. So that is our range. So that's our range right there. And if we're looking to go higher, you take it from this low to that high, discount is below the midpoint of that range. I do not like this, right? In this delivery here, when we called shorts the other day in my private group, we wanted to see if we could take this out. But again, you can see the respect to the logic of this being a balanced price range. It can't be argued, right? Like, why would it be holding there? Why does it hold in these ideas every time we talk about it? It's because it's a fact, right? It's how the market works. ICT teaches it too. He says anything that has sell side, buy side that's overlapped can be classified as a balanced price range, right? He's taught that in the private group, and he's shared simple ideas about it publicly. But essentially, sell side, buy side, especially if stops are taken on both sides and it leaves, that not only creates a new dealing range, but it also creates a balanced price range when it leaves that level. So we got sell side, buy side in here. If this was to break it down below these lows here and aggressively reprice, right, this balanced price range may get given up. And then we would also now have this as a BPR. So if the displacement takes place, right, say it breaks down aggressively, right, shows like no respect to this, starts having large range down candles. If it was to return back into that, the midpoint of that should not be taken out, right? And then we would be able to then observe and analyze, price continuing to then go lower. And then again, this low to that high, once it breaks that low, that becomes a balanced price range. And now that midpoint shouldn't be taken out. And this just happens over and over. It's like building blocks on top of one another as price is printing. And if the lower time frame looks like a crazy sporadic war zone, you just simply move to a higher time frame. Look for these signatures and you can get calibrated very quickly, right? This is again something that I'm heavily leaning on when I'm teaching my private group, but hopefully this helps somebody out here because it's very simple, right? It's not complicated. Hopefully, if you're brand new, you're probably thinking, "What the hell is he talking about?" But just stick around, give yourself some grace. You know what I mean? Be patient with this. It's a very hard thing to do, very complex, requires a lot from you mentally, emotionally, financially, time wise, right? It's a big investment. It's a career. It's not a hobby. And if it is a hobby and you don't study the way you're supposed to, you will be hurt. You will lose money. So you might as well just not do it. You might as well just go play the lottery, right? It just won't be worth it. Or just long term trade, right? I do that and teach that too, right? Like stocks and Roth IRAs and all that. Uh, you know, planning when it comes to that. I'm not a financial advisor. It's just opinion and things that I do. But I think it's been pretty pretty solid. Um, this year, long term, we're up 56% in a long term portfolio. Overall, in the account, the last 4 years, we're up 156%. The last 3 years, so I'd say the stuff works, but again, there's no guarantees and the same financial advice. I'm not a financial advisor. But yeah. So, and again, a lot of the topics that we use short term can be used long term as well. So that's something you could think about. If you guys want me to talk about long term trading, I've taught swing trading models and whatnot. If you think that might be your realm, that's something that I teach students as well, those that need it. I'm obviously a day trader, but just because I'm a day trader, doesn't mean that other schools of thought are difficult because it's all the same. It's just a longer time horizon. Stocks, though, could be a little bit different. Depends on what you're doing. Long term, you want to know what's going on with the companies you're invested in. You want to know how to break them down, see if they're viable companies, get projections of where the company should be. Are they going to be here? I mean, there's so many things that we teach about that realm of things, and we're starting to get into options now too. So anyone that likes options, eventually I will have um, the system fully created to give to you. It's all the same stuff that we use here, but just form fitted for options. And ICT teaches that you could be universal. You could do many things as a trader. Once you learn how price operates, the whole world opens up in terms of investing. You could do literally anything that involves investing. It's all the same for every asset, crypto included, because I long term trade crypto as well. Shout out XRP and XLM. So definitely two companies to look into. Not financial advice, but yeah. So again, hopefully that made sense. We have 10 minutes until the open. If we go take a look at all three indices, look at the daily chart. We are having a pretty aggressive sell side interest for this. Like this is a good example of what we don't necessarily want to see when we have a large wick. There's not really much displacement. So that tells you right there that it's going to be less dynamic. It's not going to be up in the upper 25% and then just be very sensitive. We've had very small candles pushing to get through that high, through that wick. So you can see the difference in character of delivery, how it's not sensitive to that upper 25%. Right? If it was very aggressive with displacement, like one or two candles that got us through that high with this wick, again, that creates a balanced price range. And again, you grade the wick, you get that upper 25 to 50%, and it should hold that if it's going to keep going up. But right now, it seems like we're forming a fractal high here. Of course, the candle's not closed yet, so we're not going to know fully if this is a fractal high or not until after the close for the Dow, but we'll see what happens. If you notice on the Dow too, uh, I mean, that was a pretty long time ago. So this could remain as something of interest if it does want to get down there. Because as of recent, there's only buy side delivery in here, right? Most people frame out the fair value gap like this, right? They get the whole body. If there's a volume imbalance, they keep that involved as well. But the thing is, this high to that low, we have displacement through that high. Sell side and buy side was offered in here, and we got displacement. But if you look right there to the left, there's nothing there. There's no sell side offered. It did a little bit of it, right? Offered a little bit of sell side, but if this breaks this order block, that'll be what it's reaching for. Okay. It still has a chance to hold this order block, right? It's not fully, completely off the table for bullishness, and everything is leaning towards bullishness. We are in the summer months now, so it could be a little chaotic seasonality wise. So you want to be, again, very cautious, very diligent with what you're observing. And we'll see what happens with price. But if this continues, we have a large wick here, right? Same thing happens to the sell side as it does to the buy side. So if we have a large wick that happens and the price trades through with displacement to the upside, that upper 25% should be sensitive. Same thing is true if we have a large down wick with displacement through it. That lower 25 to 50% of that previous wick should be looked at as well as a BPR. Okay. So when it breaks through that, the expectation, if we're bearish, if we have a target, if we think it's going to go lower, when it trades into that wick, we are anticipating that the lower 50 to 75% of that wick, okay, should be respected on a closing basis. It could wick through it. Sometimes it does, right? It goes up to 75% or the upper 25 up here. But on a closing basis, the candles close below the lower 25, lower 50%. Okay. And with that being the case, if you get displacement after that, pushing away still, respecting that level on a closing basis, then you're on side. Price is telling you that you're on side. It's the same thing with order blocks, right? If you see price closing outside of an order block open price here, changing state of delivery, you should start to see that nothing closes below that midpoint of that order block. And order flow wise, if you can observe this, like this, then you're on side to keep going higher. Mind you, I'm on the daily chart, but this happens when you're in an entry on the 1-minute chart as well. So if you're in a price leg, these are signatures that you want to really pay close attention to, because this is understanding the language and true order flow, right? From the candles alone. Sometimes, you've heard ICT say, all I need is a candlestick chart and it tells me everything I need. All I need is the open, high, low, and close, and just a naked chart, and that's all I need. He's thinking about these things because the candles tell you a lot about what's going on in price. You just have to know what the hell you're looking for. And whenever it trades into a PD array, a wick, any PD array that's talked about, a wick, a volume imbalance, a fair value gap, an order block, a breaker, mitigation block, any model that he's taught, when it trades into those PD arrays, when it triggers in that model or that pattern, this is what you want to be observing. If you're bullish, the upper 25 to 50%, if it should be respected on a closing basis, right? If you're pushing away, the lower 25% if you're bearish. Okay, lower 25 to 50%. And if you can't see that, if you can't justify that, then you're probably wrong about whatever direction it is that you're aiming to see price go in. Okay. Hopefully that's simple enough to understand. What I just gave you is extremely, extremely helpful. And when you go into the chart and study on your own, or watch me today now with this understanding, if you haven't heard this before, you're going to be pretty shocked because I'm observing this constantly. Okay. So throw one in the chat if that makes sense. I know some of you guys probably been here for a while and it's just review, but let me know in the chat if that makes sense. Appreciate y'all for hopping on, by the way. Should be a good session. We got news at 7 a.m. as well. So, see what happens. We're gonna let that first 30 minutes unfold. Again, we're a day before some craziness. So yeah, I'm actually gonna go run to the bathroom real quick. Give me like 2 minutes. Okay, I'm back. Okay, so we do have price moving up here. Again, we have a wick right there. So hopefully you guys understand this level, why this should hold in there. We're actually going to move that wick level to here. Hit our wick. Got this wick right here too. Okay, so that 8-hour wick is actually same as that daily wick right here. So again, we got bullish breaker happening here. We got an inversion fair value gap right there. It's looking like we have a market maker buy model unfolding. But we'll see. We'll let the 630 come out. So yeah, we're not going to be in too much of a rush because again, we have the news at 7 a.m. Let's get a little bit closer in here. Again, we can't disregard the fact that this low down here is a failure swing. We're inside equilibrium, like we just discussed. Again, we do see that the dollar, I don't know why it doesn't update. Okay. Again, the dollar has that high up there that we got to see getting respected. Yeah, we'll see what it wants to do with those really clean lows down there. Showing that we have SMT here. Let me go double check. Damn, yeah, the Dow is just on a rampage. Holy crap, that's huge. So we got the NASDAQ being the one that wants to play games a little bit. So yeah, we'll see what happens. So yeah, if this is going to be a buy model, right? If it was to be something that's trustworthy, we got accumulation, smart money reversal. So again, this high to that low, 50% of it should be respected, right? This low to that high, right? When it came down targeting this low to finish off a market maker sell model, it didn't quite finish it off. And now we came back all the way above midpoint. It's equilibrium from, again, this low to that high. So that's why it's kind of stuck. And it's best to give it some time. Again, these lows down here are definitely something that we cannot discount, but we got to see the dollar look to go lower. You know, we're due for some type of retracement, but again, we don't pick tops. We got to let price do what it's going to do. And if this is going to go lower, I'm not interested in taking something so high up here. I need to see it confirm by smashing, getting much deeper inside this range. And then we could look for second stage distribution. Right, go from this low to that high. We got equilibrium there. You know, we definitely want to see how this is going to treat this. And again, the dollar, we don't want to see it break outside of that high. If it gets above that high, oh, that's my entry on one of my stocks I'm looking for. Just double check real quick. Okay. Okay. So yeah, we got very, very rapid movements here. I'm just going off with my alerts. Big time decline in there. Big decline. Big cracking correlation overall. So I'm definitely not willing to touch this yet. Again, I wouldn't put it past them to try to come down into here, but again, preferably we want to see it stay above in that upper 25%. It's perfect at that upper 25%. Literally can't get any more perfect than that. Look, right to the tick, leaving this fair value gap available, right? As it was continuing the interest to the buy side. The rejection block up here could be used as a draw potentially, but we have another rejection block down here as well. Okay, so that right there, these are all rejection blocks. This one here, this one here, this one here, that one there. They're all rejection blocks at particular levels, right? Inside this wick, inside this high to that low, that upper 25%. Right? If you take that upper 25% and you actually break that down too, you can get an even better measurement, right? It used the midpoint of that upper quadrant to the tick and the upper 25% of the upper 25% of the bigger range. Most people don't know that you can go and do that. Break down the quadrants of the quadrants in a PD array or like a fair value gap or a wick. Yeah, you see this decoupling here? That's not something we want to see. Whenever you see that early on in the session, especially right at the open, that's the clearest sign that you got to wait. Wait for that first 30 minutes, let it unfold. You may miss a move, right? You may take a loss if you don't engage or if you don't hold off. And then you could end up being correct on the day, you know? So it's just the risk is too elevated. Plus, it's NFP week. I'd be doing you a massive disservice if I just wanted to put you in trades, or because, it's not even what my intention is, but I'd be doing you a disservice if I didn't point this stuff out just to make it so you're constantly hopped up on goofballs, like rush of dopamine every 5 seconds to watch. I'm not that type of mentor. I'm not going to do that. I try to teach you the right mindsets, right? So again, if this fails and breaks down through this fair value gap, like I said, second stage distribution should be able to unfold here. We got that lower 75% from this low to that high. And it would really be, not much of an issue if price was to invert, say this fair value gap. I think we'll look at that instead of this one. So if we can just use this as an inversion, if it gets through that, we'll have a very clean ride down into this. Again, this is still a BPR. It's going to still remain a BPR until the midpoint from this high to that low gets violated. I mapped out these clean lows yesterday. So we may want to get down there, but again, that's being defended with this balanced price range here, okay? So that's why it's having a hard time getting down into that. So again, I'm not necessarily too concerned about this. This right here may in fact turn into, if it is going to take these lows out, this may be used as our momentum order block, right? It's just a order block with a reasonably sized wick that has displacement through it. When it comes back into it, if it is bearish, the signature you'd anticipate is that lower 25%, lower 50% of the wick being respected. It has up to the midpoint there. Okay, but specifically there's this displacement. So that makes me feel like we may want to get down into this. But again, we're going to want to see how this responds. Let's let it present us with some type of retracement if it offers it, and then see how that behaves in there. And then again, once it gets through this lower portion here, inverting this fair value gap, that'll then and only then will I be comfortable looking to try to do something. But yeah, we just basically created a bearish breaker as well. Right, so low, high, lower, low. So if it's going to be bearish, we should see very little resistance to continue to go lower. But again, if this is bullish, which is what the higher time frame shows, right? It's still a narrative that's going higher. Even if it drops down through this low, it's still underlyingly bullish. This is all short-term short positions. If it was to go short, we have S&T at the lows here. You see that little line? So yeah, that lower low versus the higher low in the S&P. Huge rally in the Dow for whatever reason. Yeah, this right here tells you it's untrustworthy. Okay. Can you take an aggressive short in there? Sure. But again, I prefer personally to end up taking it when it gets a little bit lower, right? Because I want to map out the market maker sell model. Right? It was printing a buy model, but it's failing the buy model just like it failed the sell model. But it's going back and forth, right? There's a buy model in here too, right? There's a sell model in here, buy model in here, sell model in here, right? It's all the time. Buy model in here, failed sell model here, right? Broke above midpoint. Our market maker model flexibility protocol targeting this, right? Ended up engaging. So again, that's what my perspective is for what we're looking at here. Clearly, it's in a real hurry to try to break down. I think it's because this is a little too clean, right? It's a little too clean. Early on in the start of the week, well, yesterday, we were looking to see if the lows in here could be taken, and then then see this rally, but looks like we may end up getting it now to target these equal lows. But again, in the moment, everything is decoupled. So that's low probability. So the risk is elevated no matter how clear it looks. So when you take a trade, if you do take a trade, you have to accept that. Otherwise, do not take a trade. Okay? Or if you have something you're waiting for that's just not in the chart yet, you have to wait. Just because it's moving like this doesn't mean you need to be in a trade. You got to really curtail that inside of you. We all have it, especially when we're new. We haven't really broken ourselves into the fact that it's okay not to take a trade, but it's just the way it is. You know what I mean? And you'll miss moves. I miss moves all the time. Does it affect anything? Of course not. We find moves every single day with what we talk about. So again, hopefully you guys know what I'm looking for. Hopefully it makes sense. I'm waiting for this to break through this inversion so then I can use that inversion level as a PD array to then finish off the market maker sell model. You see this run higher, lower? Go to the 15-second chart. We got a market maker sell model, right? Stop run. Accumulation on the left side, right? These bullish order blocks. Once they get broken through, price comes up, and if it's bearish or if it goes lower, it should respect it. Again, I don't trust overall bearishness at the moment until we can get down to here. Then once we do that, that'll be my opportunity. This green box is a new week opening gap. Let's see, where's our first presented fair value gap? We have one yet? Nope. So we don't even have a first presented fair value gap yet. So just another reason to wait. I'm not sure where my regular trading hours went. Why is it not showing me? It's not showing me my regular trading hours indicator. Not sure what's going on there. Was it tiny? I'm not sure why it's not showing it. That's annoying. Yeah, so we might have accumulation, manipulation, and then distribution to get us up above the highs. Because look at that. Look how beautiful that is. Oh, take this out real quick. So you guys see this little faint blue box? It's like a little faint red box too. Right? So we got accumulation, manipulation, the red, and then going into 7 a.m. we might be able to see our distribution. This may be triggering in that distribution. You see why I didn't trust the shorts? Why I wasn't thinking, oh, I got to get in. It's too risky early on. I like these equal highs up here that were left though. So that's something that I definitely got my attention on here. And so now, again, if it doesn't want to go lower, doesn't want to create that market maker sell model, we'll be able to see this candle here. We should be able to see this candle here act as support for a buy model. Again, still no first presented fair value gap. We probably have one on the 30-second chart. this candle's range in here needs to hold. If it's going to be bullish, this should be sensitive, and it should get us up above these equal highs here. And again, if this just starts to smash and we can't even break this low to that high as 50%, which is a breaker, then price will, continue to go lower if it can't get up beyond that and we displace. Right in here, those of you in my private group, hopefully you're seeing the razor model unfold. Again, it's too early for me. Looks like this level that I said should hold is now going to hold though. So this is pretty convincing that we're not going to go lower. Plus we got the other assets somewhat agreeing. But again, it's always difficult to trade into these, to trust it. When you trade against equal lows that haven't been tagged, eventually they're going to tag them. And that's the problem, right? Okay, so we now have bullish breaker happening here from the 7-minute chart. So yeah, this should be sensitive. It shouldn't come back. Again, the market maker buy model that I outlined is still holding. So again, the objective is up there. Beautiful respect to this, right? That's a wick we outlined earlier from the 8-hour. Upper 25% of that's holding. Dollars, still kind of finicky a little bit. But again, this should end up really accelerating because we're inside the macro here now too. We're also inverting the fair value gap. So yeah, let's see how sensitive this is. It should get us up there. Again, we're ahead of a news event, so that may cause a concern. We're also still at equilibrium. So anything in here is a bit risky. And again, it's NFP week. So don't be surprised if things get a little bit chaotic. But that's what I'm paying attention to here. Got our stop run. So we should be able to get up there given this macro. I'd really enjoy seeing dollar start to decline. But so far, everything is still holding up to attack this high up here. Let me go see the comments. Look for longs if attempted. Yeah, look at that. There she goes. There she goes. See if it wants to get beyond that. Again, we're inside the macro ahead of the news. So it may not want to go, right? It may want to just bounce around, bang around, and play with people. We're above that breaker here, so that's interesting. Yeah, it looks like it's holding until that news comes out. Yeah, that right there was enough for me. It was enough for me for right now. How many points was that? That was 70, 64 points. Not bad. Stop right below the rejection block that was formed. Here, let me show you guys real quick. Let me show y'all real quick. Amp live. Oh, whoops. Live account, as always. Talked about the target. Probably should have held it, but 64 points is not nothing to be played with. Definitely pays your bills. Whole electric bill is paid on just this trade right now. So that's honestly what my intention was this morning, was to pay that one bill. So within a couple of minutes. Why am I exiting so early like that? Well, first of all, it hit my overall target, which is 20 to 30 points. Went beyond that. But more so, why I would want to get out like this without letting it take out the high up there is because what I was mentioning a second ago. The news is right around the corner. It's NFP week. Do I really want to play with the devil? Like, do I really want to give it a chance to give me back, or to give back the gain that I was already able to accomplish in such a short amount of time? Most people can't even get 10 points a day. Most people can't make $1 at the end of the year, let alone the end of the day, end of the month, end of the week. Right? So a lot of people talk crap about 20 to 30 points, which they never show you what they do. But again, when there's news right ahead of the execution that you're involved with, and it runs to your target, at least 20 to 30 points, get out. Okay? I'm not encouraging you guys to take trades at all. I'm not a financial advisor. But again, if it offers it to you, get out. Let the news come out and then maybe do something later. Right? We'll still obviously be here for a while. We still got a long time, like an hour or two. So we'll talk about a lot of things, trust me. If this isn't something that you feel comfortable with, it's the way it is. Right? But again, look at that entry right there. In the moment, I was telling you guys, at least those of you in my private group that know my razor model, told you guys the razor model was there. What do we like to see after the razor model completes? It was a little bit late to the razor model. The razor entry would have been here. But what do I tell you guys should be the case once you get into the trade if the razor model is present and valid? You want to see speed and distance. What time was this happening? In the macro, right? Do we have clear targets? Yes. Is the higher time frame bullish? Yes. What's the red flag? We have these lows down here. right? Is that enough for you to be worried about it? It's up to you. I wasn't worried about it, right? But then again, I've burned into my head the fact that losses don't matter whatsoever because we do this every day. And those of you in my private group, let everybody know in the chat if I'm telling the truth or not. Do I do this every single day with you guys? Or am I just full of shit trying to sound more than I am on YouTube publicly, right? Let me know your opinion in the chat. Let them know. By the way, there's a breaker here, so it should be very, very aggressive. But yeah, let the world know. Is this something we do regularly, or am I full of shit? Okay, now outside of that, like I said, last week and the week before that, once a month, I'm gonna pick either the second or third week in the month to go live every single day here on YouTube. Okay, so you guys are gonna get 5 more live calls per month. Yeah, Maddie said, without fail, every single day. Maddie's been with me for how many years now, bro? Excuse me. Maddie's been with me for a while. Took a little break, but you're home, right? You're always going to be here. So it's coming up on 2 years. Beautiful. Yeah, think about it. He's got an opinion with someone that's been with me for 2 years. He's not like a new student, right? Maddie is one of the best students I have, but he's been here for 2 years and he's saying without fail every single day. We do it every single day, which is a crazy statement to say. Like it's a crazy thing to say because because they say that that's not possible. Well, guess what? I'm not ICT, and I show that it's possible every single day. Right? Obviously, depends on how much work you put in. But yeah, that execution there that I just told you guys should just ran. So that's another secondary entry inside the breaker, right? My early entry, given the razor model, me looking at the seconds chart, offered the best risk to reward. But then again, it's not the only idea. I literally just told you guys we should see that rip. And you were then offered another 50 points, probably more, while we complete the full target. So I just talked about, well, I didn't necessarily point this out too aggressively. I did say that the razor model was there. If you kind of caught the drift there, right, you would have been able to see that as an execution. If it obviously was something comfortable for you, maybe not, right? But again, I'm not here to put you in trades. I'm here to tell you what I see, and then we watch it unfold, and then you learn, and then eventually you do it on your own. But again, this was an execution here too. Okay, that was a 5-minute breaker. Okay. Another thing too, if we take this off, we have my momentum order block here, stop run, order block with a reasonable wick, body displacement. Price tried to come back into it, never did. Just ripped to the buy side. Okay. Dude, I freaking slept on my neck wrong like 2 days ago, and bro, oh, dude, what a mess, dude. What a freaking mess. I feel like my head's gonna fall off. Ugh, what a mess. Maddie said health and family first and trading. Yeah, absolutely. It's always going to be that way. You can even add friends too, good friends. Trading is a vehicle. You know what I mean? It's a vehicle, it's a skill set, it's something that I'm assuming everyone here is passionate about. I'm passionate about it. This is my life. I don't see myself doing anything else. I went from sports after high school, didn't know what the hell I was going to do because I got hurt. And then was doing construction and I didn't like it. I wasn't getting paid enough. wasn't appreciated. People that had less experience than me were getting paid more. It was just a bad experience. Uh, and then trading fell into my lap, and I was like, what the heck is this? I was already invested in crypto. I was already invested long term. Didn't know what the hell I was doing, right? But I did know certain cryptos were going to be very powerful, like XRP and XLM. Been invested in that for longer than I've been day trading. But yeah. So can you go over good spot to place stops on breakers that form like this? I get asked this all the time. You get asked that all the time? Sorry. So let me ask you this, Jen. When a breaker forms, right? High, low, higher, high. What does that create? Aside from it being a breaker, right? What is a breaker? What is a breaker, Jen? Same thing as like an order block or inversion fair value gap. What are those things? Oh, if you guys get value from the video, don't forget to like the video, share with anyone you think can get value from these types of calls. We're literally 2 for 2 right now. Typical story. But yeah, Jen, let me know what is a breaker? Or if anyone else has an answer, you guys can answer it too. But this is specifically going to answer the question of where should I place a stop on a breaker that forms like this or forms in any breaker, right? It's going to be the same answer. Same thing with other PD arrays as well. But yeah, what is a breaker, right? I will wait for your answer. It's PD array, yeah. What else? What else is an order block, a breaker, inversion fair value gap? What else can they be classified as? We talk about it all the time, y'all. Let's see who's been listening, yo. Now look how beautiful that is. Should have held it, but hey, I don't hold through through news for the most part. But full target's been met. Maddie, absolutely. And in a balanced price range, because that's what those things are, they're just different classifications. Where does the BPR get invalidated or starts flashing red, right? On the or it should start flashing red. Where in that balanced price range would make you start to second guess the balanced price range? Equilibrium. So where would we put a stop if the breaker's like this and you execute? Where should the stop be ideally? below equilibrium, exactly. And again, below equilibrium, it's down there, right? This is obviously very aggressive. So again, that upper 25%, right? That's why my stop was right here, right? When I labeled it. You can obviously give yourself a little bit more room, and then as price starts to run more, slowly start to peel off the risk. Because now we got other things that should be protecting price up here, like this fair value get or this wick and that wick. Okay. So hopefully I answered your question. I like to answer questions like that instead of just giving the answer because it makes you guys think, and then it sticks much more because you come up with the idea, right? I learned that tactic from ICT, by the way. It's very, very effective. Yeah, no, Jen, that's exactly right. I mean, the amount of calls where good ideas have been given, if traders just listen, those that come here, like you guys, I mean, just think about it. How many good trades have I given this year? I literally don't even know. I literally have no clue. I mean, at times we've called like 4 good trades at a time in a session, over and over and over every single day. So at least 100, at least from January to now, at least 100, probably way more. Because we don't just find one setup. We find one good setup, and if I engage, I'm done. But outside of that, I always give you guys further context, further ideas for continuation and all that. Because again, you're not always going to be able to get the best trade. You're sometimes going to miss it, especially being new. But just think about it. Those of you that have been with me for a while, I mean, it's fascinating. I wish I had somebody that was willing to make themselves accessible like I do, like that come out and can actually do this like this. I wish that I had someone that was able to do that, that was willing to do it. Because many are able, they're just not willing because they gatekeep, you know, which it makes sense because they're good and they work so hard for it. They got their own intentions or whatever, but I know how hard it was for me when I first started. I wish somebody would come out and do this. ICT doesn't even do this. He didn't do this at first, right? He didn't do live calls. He didn't allow himself to be open, like widely available, right? To be able to answer questions. And his community is like massive, so it's a little bit difficult. So maybe it's not even his fault. But again, you know, I honestly watch many live streamers on YouTube, and I have students that have also agreed with this opinion. Majority of them literally don't compare to what we do. They can't come out every single day and find something that works. Even if they take a loss, they can't go back in and find something. Most of the time, they're being destroyed without telling you. But then claiming that they got something that's worth listening to when it's all BS. And those people still don't even make themselves widely available. They don't offer one-on-ones. I offer that, right? To sit with you one-on-one, walk you through whatever you're dealing with, give you a custom learning experience with constant support. And I go live every single day. Nobody offers what we offer. They just don't. And part of it's because they can't do it. And they know that if they do try to do this type of stuff, they're going to wreck themselves because they don't truly believe in what it is that they're doing, or they care too much about people's opinion. I could care less about opinions. My whole goal is to help you guys, and I can't help you guys if I don't come out and live the confidence that I live in as a trader. I can't help the way that I want to help. I wanted this community to be different, especially my private group, but especially YouTube as well. I don't want to be like everyone else. I don't want to just be a signal provider. It's basically a drug dealer, right? It's providing drugs in the form of trading. Jenny said, if you felt you missed the entry, what would you do and wait for? So again, every model that we utilize has a continuation variation, whether it's the 2022 model, the razor model I teach, the breakers, any of those, right? Any of them. They all have a continuation variation to them. So if I miss that first entry on the lower time frame, say I'm on the 1 minute and I miss that entry, right? Say I missed that. Well, all I normally do is just move up to like the 5 minute or the 2 or 3 or 4. I flip through some of them, and then I just look. Okay, well, that lower time frame best case entry was missed. What about the what about the time frames that are above it? What can I see that I could then try to utilize as a re-entry? Well, like I said, we had that breaker there. So if I would have missed this, that would be where I would have executed. Right? Sometimes you're going to have to do that. And then in this case, with price moving aggressively like this, if you haven't hit your target yet, you just look at the PD arrays that are in close proximity that you're comfortable with trading, and you try to utilize those. When it trades into them, you should see respect to those levels. And if it proves that it's respecting it and everything in your analysis aligns with you still going higher, in this case, because it hasn't hit your target yet, you then look at the PD arrays and try to execute those, right? Whichever ones make sense to you. Or if you're not really too versed and don't have a lot of PD arrays that you have at your disposal in terms of knowledge, you just wait for your model to show up again, right? Wherever that may be, right? Like this low took out this low. So it created the bullish breaker there as well. Right? This may have been a little bit chaotic because again, news came out, so you'd have got screwed over. But on a normal day where news was not happening, we have sell side here taken. We have a bullish breaker on the 5 minute, higher time frames bullish, right? So once it takes this high out, we should get respect to that. And then that's an area you can execute too. Say you miss that too. Okay, great. Well, this wick here, if it wasn't there, I mean, the fact that it's there, it can be used, right? You break that down into quadrants, you have the upper 25%, and then it pushes away, creating the momentum order block that I talk about, right? Closing above it, price comes down into it, respects it. You have a high, a low, right? It took that low there, higher high. So just the breaker, right? You got another entry there. You got the 5 minute breaker here. You have the breaker that I just pointed out here. So there's one right there. Once it takes that high out, returns into it, respects it, should be a balanced price range because that's what a breaker is. You have this high, low, higher high. Price returns into that. That's a bullish breaker there. So there's 1, 2, 3, 4 breakers. Is this not a high, low, higher high? 5 breakers, right? Less clean in there, right? It's less of a dynamic, obvious visual in there, but still, the logic remains. And you have the down close candles here. When you move up in time frames, got a bullish order block. So if you didn't see the breaker idea, you can just go in there and look at this, right? Down delivery into that. It's respecting that midpoint. Price should continue to keep going up. So if you miss this entry down here, this is why you don't want to think, oh, I missed the trade, I can't do anything. Because you absolutely can. There's so much more opportunity than you can even imagine. The whole goal, though, the whole caveat, though, is the fact that you have to know what you're looking for. And again, I try my best to really lay this out, and hopefully what I just said makes sense, right? Because and this here too, right? Say you miss this breaker, say you let it run. Okay, great. When it comes down into it, you also have an order block with a breaker. So it should close above that midpoint. Did it? Yeah. Maybe you missed this wick because it was so aggressive. Okay, there's a wick there, upper 25%. We got the breaker. It's rooted in this. We have a stop run that happened earlier. Displacement, it's still bullish. We got a PD array we're reaching for, or some high or some point of interest above. So when it comes down into this right here, those of you in my private group, you guys know this is the wick model. Large wick, stop run, failure to get to the midpoint, change in state of delivery, execute on the change in state. If there's an inversion for value gap there, you can use the inversion that gets traded through after the stop run, after the wick gets respected. You have many, many things on your side to get back in line in the market, right? I just laid out a lot of different opportunities in this one price leg so you can know that missing a trade, the best case entry doesn't matter. Who gives a shit? Right? Who cares? You want your piece of the pie. Get in there, think about things from this perspective, and you'll be fine over time. Does what I just mentioned and laid out all the different components there make sense? And again, with the underlying context being that, we got this rejection block up here, it hasn't been tagged. It's bullish. The dollar looks like it wants to be bearish. We're still respecting that intermediate term high like we talked about up here. It's giving people the sense of a bull flag, but I'm not thinking bull. I'm thinking bear. Got that low right there. Do got these equal highs up here, which may end up becoming somewhat of a problem at some point, but I could care less about that right now. Looks like it's still respecting until it takes that high out. Right, we're not going to be too concerned about it. Okay. Yeah. Yo, Maddie, you know the vibes, bro. This is just like a gem factory, this community. But it's unfortunate that, many people's attention span is the size of a gnat. So, unless you're like doing backflips off a chair, they're not able to stick around. Or unless you're putting them into trades, feeding their drug addiction to signals, um, they don't stick around. But hey, that's why the handful that do see progress. And that's why like 5%, 4% of people can succeed in trading. It's because of that. It's just the facts, right? It's the facts. But yeah, that's what it's like to be an educator out here. Unless, of course, you get shouted out by ICT, then people stick around because ICT put a stamp on it. Makes sense. But yeah. So let me just verify everything makes sense, you guys. Everything that we've talked about, the multitude of executions that I just made you aware of. It's not only these two trades, right? I just literally talked about like 5 more trades that could have been executed under the same narrative, the same idea of what we're trying to see price do. So does everything make sense? If there's any holes, just let me know, right? If there's uh anything that you want me to amplify, I can. Making more sense today than yesterday. Yep, that's going to be the process, Maddie. That's going to be the process. One day at a time. And you'll wake up one day thinking, holy crap, like I'm looking at the chart, I can like see that things make sense now. It's like those pictures, right? Where it has like a picture hidden, and then when you just like relax your eyes, all of a sudden it shows up, the picture. That's kind of how it is in trading. You know, at first it looks like a picture that you don't really see nothing in. But then over time, when experience comes in and you're listening to someone that proves they know what they're talking about, right? Everything just somehow shows up. The fog disappears, right? It's like everything defrosts and it's like, oh, there it is. And when that moment happens, it's very fun. It's very liberating. Exactly. Maddie, that's a great way to put it. That's exactly what I aimed at accomplishing when it comes to my teaching, the way that I do things. Learning by immersion. You're being immersed in my own personal experience, you know, and you get to borrow from it. And when we call bias and narrative and where price is going to go, the fact that we're correct, like high 80, 90% of the time, which we prove every week, I mean, that helps too, right? And I teach how we do it. I teach how we get to that objective. So it bleeds off into you, right? Proximity to success or proximity to people that know what they're talking about. It it's very, very helpful. 2022 study is helping, but the class has more benefit. Yeah, no, I mean, I could see how that's the truth. That's how it was with me. I have two other mentors outside of ICT, and they would immerse me in it. They go live every single day. They keep their community small, just like I do. Of course, YouTube, I'd like it to be bigger, but the private group is always going to have a limit. I'm probably going to be able to allow like maybe 100, maybe even just 50 at a time. You know, because I don't want to just I don't want to be the type of mentor that just gives you content and tells you to go figure it out. It doesn't help, dude. It helps over time, but it's like, people need help right now. Like they want things to happen or feel like they're learning something and see it applied more quickly, more, I guess, immersed, right? The immersed feeling like you're in it. And that's by default giving you more experience. And then that experience translates to clarity, and then clarity helps you take it along the rest of the way. Because I can't make you profitable. I can't guarantee you profitability. You have to do that. I could give you tools, just like a construction worker, right? You can give them the tools, but if they don't know how to use the tools, if they've never seen how it all works, they may figure it out later. But it's better to have like an apprenticeship, so you get to shadow someone that knows what's going on. That's what this is. That's what my private group is every single day for what, 4 years at this point. It's just you get to walk with me every day, do this exact thing every single day. You get to ask questions live, just like this. So yeah, the immersion, that's what makes this effective. For those that are serious, right, that aren't, again, trying to be candle addicts in a negative way, basically just looking for a dopamine hit. Give me in a trade, bro. Buy or sell. How about this? Buy and sell, right? See which one works. I don't know, right? One will work at some point. But yeah, find the 5 people you want to spend the most time with and make time for those people. Damn, I appreciate you saying that, Maddie. Sincerely, bro. Appreciate that. I appreciate that, bro. So yeah, now price is pulling against this now. So a very, very interesting morning. Obviously tradable. Obviously tradable. Beautifully tradable. But I can guarantee you there's people that probably blew their accounts. There is every single day, and those are the same people that fund our trade. So, can't save everybody. But yeah, in this instance, say we missed all of this. All right, what would we be looking at now? Well, let me actually do this first. If you guys got questions, let me know. Let me just get this put in place so I can document it. Appreciate you guys hanging out today. The hell is that? So yeah, this is pulling down into the is that the 4-hour wick? So if we were to go to the 4-hour here, zoom that in real quick. So as long as this wick midpoint stays intact, which is below this level here, as long as that wick stays intact, it will still be solid. Now, if this starts to break lower through this low, There is a consideration that has to be had for this being accumulation, smart money reversal. And because there's a low down here, these multiple lows that are trendline liquidity, if it was to break through this, you'd have to consider that this low may end up getting targeted as a sell model. But again, if this declines in here, maybe it comes and takes this low, but then aggressively reprices to the buy side, we'll still stay with buy side delivery. Things are not trustworthy for shorts or buys at the moment. It's already kind of delivered the buy side that we wanted. So we're getting this low rejection, this high, low, failure swing, breakdown. That becomes a mitigation block, right below that low. So you see the wick into that order block plus that last down candle, part of the failure swing. And you could see price justifies a run focused on equilibrium. But again, we broke through this. And now if we break through this, what we would want to pay attention to is obviously this fair value gap here too. But this being taken out should result. Let me move that over a little bit. This getting broken through, if we see price return into that and it respects it, okay, we should then see it accelerate. We're not in a macro right now, so we're pretty far away from it. And we've had, sideways movement. We're kind of gravitating back to equilibrium, which tells me that price may not be too interested in acceleration. Just put the equilibrium there. If this is a sell model, if you take it from the high to the low to the high right here, 25% equilibrium, 50% right below that, 75%, and then we have that low. So 25, 50, 75% in a price swing. This is what ICT calls graded price swings. So whether you're on the higher time frame here, grading that price swing, right, that dealing range, or if you're grading this one, the 25, 50, and 75% levels of a price swing are significant because a lot of times they will offer PD arrays, and they will also offer like stages, right? Like if you're looking for the second stage distribution, you can obviously use the candles of accumulation on the left side if it's a sell model, right? You can map those out, the last down candles. But you can also many times see that the 75% and the 25%, sometimes it's the 50 and the 75%. Many times the accumulation level is going to be layered on top of that or in close proximity to those quadrants within that price swing, right? So again, this is very useful, especially when you're mapping out a market maker model, because again, it could be like a skeleton framework for where the accumulation and distribution should take place, right? So again, this here's a 5-minute bullish breaker, if you guys remember. So that bullish breaker, given that it's a 5-minute PD array, may hold precedence over that accumulation on the 1 minute or the market maker sell model on the 1 minute, right? That is subservient to the 5 minute. So we have to lose that 5 minute in order to really trust that this will continue to go lower aggressively, right? In a trustworthy fashion. Otherwise, this is just a retracement. If it inverts this fair value gap, it may offer another opportunity to then seek the rejection block, which is here. Rejection block is a PD array that gets targeted as a magnet many times too. It's a PD array, right? It's just like anything else. And it's just equal bodies, right, with a wick, right? Equal bodies, a little bit off, but that's just like, I don't even know what you would call that. It's just like unaligned, right? It's because that's kind of the way the candles are at times. It's relatively equal, these bodies. And we got a wick down. So that should act as a rejection block. You see that it was sensitive. It barely could even tag it right there. It tagged the candle's close here on the down candle and then accelerated. That's how you know it's a rejection block. Same thing here, right? Hit the rejection block, no closures below that. So that's telling you that it's a rejection block that's going to hold. Same thing here, right? If it would have traded into it, we would have liked it to be respected. This, if it was going to be bearish, would have respected the rejection block there. It didn't, right? Very, very deep, wild retracements in here back and forth, but that doesn't upset the foundations and how things operate. It may look a little different, maybe a little bit more manipulated, but again, that's why you have to prepare for those moments and be able to identify them. But still, nothing changes just because the price action looks wild, right? You still want to trust and believe that things like the rejection block, like you see here, they should hold. If it trades into it on a closing basis, it should stay above it. And if it's bearish, it should stay below it, especially if it creates a high like this with a rejection block. The next candles, if it trades into it, and we can't, first of all, get to the 50%, but then again, it also can't close above the rejection block high, right? That'd be in this level. It's telling you literally that it's bearish. Okay. And vice versa, it's telling you that it's bullish if it's going to the buy side. Okay, so this is the rejection block. I haven't taught about the rejection block a lot over the years, but I feel a lot of you guys have been with me for a while, so we're incorporating more stuff, right? More understanding. Process doesn't change, right? The process is all the same. The things that we operate with, how we determine bias, the execution models, none of that stuff is going to change. I already have everything that I'll ever need, so I don't really even got to add anything else. ICT has a lot more things to teach, but you get to a point where you already have enough. You're just causing yourself more stress, more extra work to try to add more stuff if you already have something that works. If you could determine what to do in the market, you could determine when not to trade, when to trade, how to manage risk, how to call the draw on liquidity, what validates a trade setup, what confirms order flow, how do you read order flow, what about stop runs, right? How do those operate? What's the use case for those, right? And of course, there's a little bit more stuff that you can incorporate. But for the most part, if you have an answer to things like that, to all these types of scenarios that leads you to making a decision that you can trust, you have enough. You don't need every PD array. You don't need every concept, every model, every different element. You just have to answer questions that get you to making a decision, a trustworthy decision. And you have to have answers to the fact that, you're going to manage risk, right? What's your process? And when you should not be taking a trade, right? Like understanding the condition, right? How do you determine that? There's a process to it. Is it low probability or high probability? Is it low resistance delivery or should I expect high resistance? Right? Once you're able to answer these questions, you no longer need to add more stuff, right? All the things that you learn have like a deep depth of, I guess, information that can go to each different concept, right? Everything is very deep. On the surface, when you see patterns, right, things seem like, okay, well, that's all there is to learn. But that's not the case at all. Everything has a deeper dynamic to it. And most people don't teach those deeper dynamics because they don't know what the hell they're talking about and they just want to influence you. But again, many traders that are actually where they want to be in the ICT community, they say the same stuff, right? There's so much stuff. You don't need all of it. You just need enough things to make it so you know where price is going to go, why it's going to go there, what is going to stop that idea and make you be flexible, risk management, targeting, projection is good to know as well. What your model is, order flow confirmations, right? How do you read order flow? How do you know it's going to go higher? What is the candle speaking to you as it's printing, right? Is it bullish or bearish, right? If you can determine that and the other things I just mentioned, you don't need every concept. You don't have to be a library of ICT. And you also don't have to be a forever student learning what to do in the marketplace, right? You want to be a student forever with how you behave and understand the market, how it affects you, how you manage yourself and all that stuff. That's a forever thing, constant management of risk, you know, through all the different circumstances you have in your life. But you'll get to a point which is where I'm at, where you don't need nothing else. You don't need to add more concepts. You don't need more of the new stuff that comes out. ICT himself even says this. He says, learn what you need to learn. You don't need every concept. Once you know what you're doing and you can make a decision and you trust yourself and it's clear and it makes sense that you can do something every day. Not that you should trade every day, but you can find something and it makes sense to you every day. Don't come back to the channel and watch his stuff. He says it out his own mouth. And I didn't understand that at first when I first heard him talking about that long, long ago. And I was like, what are you talking about, bro? I got to learn everything. I'm going to feel like it's incomplete if I don't know everything. And then come to find out almost 7 years later, he was right. And I fought it thinking that I have to watch every single video, which I think served me well. I've watched every video from his private mentor commentaries and lessons to, all his extra calls that he has in that community, and then all the stuff on YouTube, which is what I started with. And I think it's helped, but there's a lot of things I don't use. But I'm familiar with pretty much everything, you know. Everything is used in a very similar manner too. There's some more complex things for ridiculous precision, right? Ways to call the high and the low of the day every single day. But we don't need that. It's more work, here and there, obviously, you'll be able to do it simply with the projection that I teach you guys, that ICT teaches as well. Well, he's the author, obviously, but the 2.5 standard deviation idea, for example, I mean, that's like one of the greatest, if not the greatest, projection tool you can ever have. Aside from the central bank dealers range, um, power three projection, right? If you get all of them from the last like 4 days, or even the last like 3 days, and you project it up, right? Like up to 10 standard deviations, wherever you see all 3 or 4 days align, right? If price is like still running higher, that level becomes high probability, especially if it can merge with a PD array. So there's advanced things, but again, even that you don't need. It's helpful, right? I can teach you guys all these more advanced stuff if you want, but the foundations, all you really need is the foundations, because things like Power 3, market maker models, and one model for execution, like one PD array, I mean, it's enough for you. But if you're a freak like me that wants to know much more than that, because you want to know that you know that you know what you're doing, because trading full time is very difficult if you don't know that you know that you know, then I'm more than happy to expand that as well into that realm. But again, you got to realize that you're going to get to a point where you don't need to learn any new concepts. You just need to solidify the ones that you already have. It's a very big sticking point where people think they need everything. And I say this a lot, but I just want to really make sure that I say it again. You don't need everything. Okay. You need to know to answer the questions that I mentioned a second ago. I actually have a list in the free group and in the private group. Basically, the stuff that I try to get you guys to understand and what you should understand. And once you do understand and have processes to those specific categories, you can really decide that you don't need to learn any extra concepts if you have an answer to each one of those subjects. I spent a long time cultivating that, and it's worked, right? It's through over 200 students that I've built relationships with. For majority of them, I'd say like 80% of them, maybe like 75, 80% of them, it's true, right? There's some other students, obviously, that, there's other issues why they can't do it. So it's not necessarily process, it's like personality wise and many, many things. But for the most part, overall, that list of categories of processes, because that's what it is. It's categories that you need to have a process to. And if you can faithfully say you have a process to those categories, then you really don't have to learn much more, right? You just have to solidify the things that you've already implemented, right? Like Power 3, market maker models, to name a few. Yeah, let me pull up that list for those of you that maybe haven't seen it before. Definitely don't forget to like the video, subscribe to the channel if you guys get value. Um, join the free group if you haven't already. And if you want to know more about the private group, which I think I've made it pretty clear about what it is. There's a QR code and there's links in the bio if you want. Again, it's not going to be for everybody. You do get held accountable. I don't sugarcoat or make you feel good every 5 minutes, but when you do things right, it deserves to be rewarded. But when you don't do things right, having someone hold you accountable is good. And it offers one-on-ones, a video archive of now, I think like 50 gigabytes of recorded videos that we've done. I mean, it's insane library of information. It's all the live calls, extra amplified lessons. But yeah, if that's something you guys are interested in, you could check that out. But if not, you could be on this YouTube channel, and I'm telling you, you will see progress just from this YouTube channel. I know some people can't, afford it because life is hard to even be part of something that's $20 a month. So that's why I have this, because I couldn't afford it. I went into debt trying to afford it. Overall, I spent like at least 10K on learning, and 5K of that 10K was honestly worth it. But yeah, where the hell is this thing? I can't find it. Oh, there it is. Where'd it go? Where did it go? Not sure where the hell it went. It's here somewhere. There it is. So yeah. So trader development roadmap. Okay. So you want to make sure that throughout the years that you study, I mean, even in 1 year, you could lay a really solid foundation. Understanding these things, describing them to yourself, price navigation, higher time frame to lower time frame, time and macros, um, risk management and mitigation, all these things we teach, right? I talk about it a lot here too. Mindset and expectations, discipline, mindset management. How do you manage yourself? Okay, you have to have a process for that. When you take a loss or a losing streak, what are you doing? Right? What are you doing to recoup that mentally? Right? When you have wins, like a 5 win streak, for example, what are you doing? Just continuing to push with no limit, right? With no plan to manage the highs, right? No plan to manage the lows. You're gonna get in a wreck, right? Like it's not gonna end well. Here's another one I did mention. If you guys, those of you that were paying attention, I mentioned this fair value gap. If it gets above it, it should be used as an inversion. So that's another entry, another opportunity that was mentioned before the fact, and it seems to be manifesting. Bias and narrative, fundamental analysis, intermarket analysis, SMT, very important stuff. Helps you determine bias. There's obviously more to this topic. I teach very in depth about bias and narrative. It's one of my specialties, right? Where price is going to go. ICT says that once you learn that, the rest kind of falls into place over time with experience. And again, another thing that he mentioned, which I was like, I need to know how to get in. That's the most important, right? With experience, though, I found out that that's just not, it's not the case, right? Bias and narrative, knowing where it's going to go, why it should go there, and doing it over time so you could trust yourself with something that's repetitive, um, that's more significant. Price action models and frameworks, like the models for entry, and then of course frameworks like Power 3, market maker models, all these things. Trading plan development, right? What are you doing to structure your trading plan? What's involved, right? How are you continuously developing that trading plan? That's a process, you know. Point of interest identification, liquidity validation, invalidation, trade management. I probably should update that and say institutional order flow components. Some of the stuff that we talked about today is part of that process with the wicks and order blocks and how price behaves around them, what that's communicating to you. Targeting projection, like where price is going to go, right? Why do you think it should go there? right? What tools can you use with the fib or central bank dealers range or whatever other projection tool that ICT teaches, right? How can you use that to determine where price is going to go? Couple that with PD arrays, right? That's why they're together. Very intentional list, like where things are at. And then routines, right? What are your routines every day? Should probably add something to that too. Self development, personal development, right? What are you doing? All these things are things that I talk about in my private group. But even if you don't be a part of the private group, this is something that I've created over the years when I was reflecting on how I became the trader that I am today. And it was because I focused on all these different components. I have strengths in each of these components, which I did not have at first. I barely had any strengths in any of this. From mindset to what is a trade. I didn't know anything. Zero. 7 years ago, I knew nothing. Not a damn thing except I'm invested in crypto, right? Because it seems like it's going to go up. And even that I messed up. I had 10 Bitcoins when it was $500. Can you like what an idiot, right? How I sold it. It hit 3,000. I'm like, oh my God, that's more money than I've ever seen all at once. And I got out. It just shows you how the progression changes so dramatically over time when you start to learn this stuff and get better with money management. Maddie said, we don't grow without people who've grown. Yeah, no, exactly. Yeah, what's up, Byron? Sorry, I just saw your you hopped on. It was covered by the chart, the chat. But what's up, Byron, bro? Byron, another freaking day, another 2 banger setups, 100% strike rate. Beautiful. Took that first one on the Razor model on the 30-second chart. It's beautiful. Market maker buy model. So yeah, hopefully what I just described here makes sense. I want you guys to screenshot this if you can. Those of you that watch the replay, I know a few people dropped off, probably because we're not giving signals when I literally just did. But definitely take a screenshot of that. When you're thinking about your trading plan, you want to make sure that you are thinking about this stuff. Do you have an answer to these things? Can you if I was to ask you about mindset, expectations, discipline, and self-management, time, risk mitigation, price navigation, bias and narrative, price models and frameworks overall, trading plan development, and how you structure the trading plan, point of interest, identification, liquidity, validation, invalidation, trade management, targeting, routines as a trader. If I asked you about this and told you to describe it and give me a process for them, would you have an answer? If you wouldn't have an answer, right, whatever you don't have an answer to, that's where you focus, right? And this is kind of how when I get one-on-one students, this is kind of what I push them to think about, and now I'm telling you guys, you got to do it on your own. You don't obviously have me walk in lockstep with you because I have, one-on-one students. And that's like, that's a thing that you got to apply for, but you could still do this on your own and it should be pretty effective. If you haven't thought about things this way, this is going to be a big improvement to how you progress. There's a reason it's called the Trader Development Roadmap, because you got to knock each one of these things down, right? Because the more that you knock down, the more that you have in the more things that you have in order from this list. If you have processes for each of them, I'm telling you, once you can answer that question, like, do you have a process to these things? If you can answer that in a yes, then I'm telling you, you'll get to the point where you should consider the fact that you don't have to learn many more concepts. You have enough, right? But yeah, hopefully that can help some of you. But that's like the roadmap in my private group for one-on-one students. And now you guys have the blueprint, if you will, to do on your own if you guys do see the value in that. Because I'm telling you right now, not being able to organize your journey in something like I just showed you, if we're just all over the place, like where's an entry? Like I'm just trying to enter, you're not going to be successful. This is a business, right? This is the structure of a business, the trading business itself. There's other things outside of this when it comes to actual like business structuring that I talk about as well, to get the most out of what it is that you're doing, so the tax man doesn't come and destroy you. Unless you live in California like me, then you're screwed. Like you got to expect that, you know, they're gonna have their bony hands in your pocket. So, but if you're in a different state that doesn't punish entrepreneurship, you can really, really, really have a crazy beneficial life, even if you're not making hundreds of thousands a year. You know, you could just make 50,000 a year, 80,000 a year, live somewhere where the taxes are reasonable, and you could live a pretty comfortable life, right? But yeah, so hopefully that's something helpful for you. Hopefully you guys got value from that. Let me know if you guys have any questions about that too. I'm more than happy to help guide any of you. But yeah, so pretty much everything that we mapped out up to this point, waiting until the 7 a.m. time. My justification for not trusting the short, hopefully that makes sense. Okay, Maddie, have a good day, brother. I appreciate you as always. I'll talk to you tomorrow in the private group. Yeah, hopefully this makes sense. Hopefully the market maker buy model idea that I laid out, first and foremost. I mean, look at what it did. Like I literally told you guys in the moment, watch this level here as accumulation turn market maker buy model. I said it shouldn't close below that lower portion. If we're bullish, it's going to work. Mind you, once I mentioned that, I was in the trade. Right? I showed you guys the execution earlier on my AMP account. So what I was speaking to you, I was trusting and engaged. I told you it should hold there if it's going to go higher. What did we say when it got in here? It's going to go higher. Right? So you put 2 and 2 together, that results in a move. And then I also talked about the 5-minute bullish breaker. That stayed intact. I said that's probably going to be an execution too. What did it do? Stayed in that upper 25% from this high to that low, right? That breaker area, or this high to that low, the full breaker range. Never came back to the midpoint. Respected the upper 25%. 7 a.m. came, which is, part of the reason why I wouldn't have taken this trade, because it's so close to the open. Okay. But then once that sporadic open came out, right, from the news, wick down, stopped out early buyers, still respecting the breaker, created the wick model, displaced, right? And continued the breaker delivery. If we take this swing low down here, from this low to that swing high, 2.5 standard deviation, that triggers in a retracement. It's ironic that it hit that and then, yet again, gives us that retracement, right? And then we got price to decline aggressively in there. And I literally just said a couple minutes ago that this area in here, where was it at? Where did it go? So this down movement, up movement, if it's a bullish trend, if it's going to continue, you then have to go and look at these accumulation levels in here. And price should respect them, right? One accumulation, second accumulation, consolidation. This should be second stage distribution on the right side. If it's accumulation on the left side, same thing here, right? We had a smart money reversal above this high. Respect to that bullish breaker yet again for the third time, here, here, and then here. Bounced higher. The razor model's in there. All right, for those of you in my private group. We got another bullish breaker in here. high, low, higher high, breaker. Second stage distribution is where this breaker was at. Okay. This high to that low, if it is a breaker, should be respected up to the midpoint as a balanced price range. Right. And let me ask you, did that hold up like that? Right. Is that logic unfolding in the chart? Right. Or is it failing and it's a fairy tale? Right. We've been using the breaker. I pointed out like 5 breaker entries today off that question of like, if I didn't take that initial entry, where would I have looked to execute? Well, every model has a continuation, but if you're just looking at the breaker, which is one of the most common, there's literally multiple of them. There's so many of them, right? And you hopefully can start to see that. Same with market maker models, right? We talked about a buy model in here. There's a sell model in here. There's a sell model in here that failed. So it failed to get to the midpoint from this low to that high. And then it rallied up, right? That rally up, if we're thinking this is a buy model, right? Because we want to see this continue to go higher. Where'd it go? We see 25%, 50%, 75%. First stage accumulation generally is going to come from this lower 50%, right? Which is right there. That's where the accumulation's at. Upper 75%, it's right in close proximity with this accumulation. So that justifies second stage distribution up there. Equilibrium, right? Price couldn't take this equilibrium to pump the sell side. So it's a failed market maker sell model potential. And then price gets above this equilibrium, dips down below it, but then aggressively reprices back above it. That confirms that this is going to be a buy model. This is the protocol we call the market maker model flexibility protocol. It's a flexibility tool that I've taught, ad nauseum in my private group, but I have introduced it a couple of times here on YouTube, and we just talked about it again. And you could see that once it got up above that, it's trustworthy to keep going, right? Clearly, so again, hopefully all this stuff makes sense. But I think that we've done enough work for today. We're about to hit 8 a.m. Pacific Standard Time. We've called out numerous ideas, framed out numerous ideas, talked about many, many, many different things today. And yeah, I think we had a pretty good session for those that paid attention. Those of you that stuck with me, thank you. If you guys do get value, you want to help me impact more people, get in front of more people that are probably just like you, or someone that may be going through some stuff that just needs to be around people that can recenter them. Who knows what they're talking about? Definitely share this content with them. Subscribe to the channel if you haven't already. I'm almost to 3,000 subscribers, so if y'all can help me get to that goal, I'd really appreciate it. And yeah, if you guys have any questions throughout the day, you can hit me with a DM. Again, all the links for joining my private group or working with me on a one-on-one basis, where you get to do this type of stuff every day. And the one-on-one side, you get to have me basically guiding your journey. All the links are in the description for that. You can obviously ask me any questions. I'll have answers. But yeah, with that being said, again, hopefully you guys got value. Let me know if there's any topics you guys would like me to go over. And I'll look to answer any of those questions you guys might be struggling with. Okay? Because again, I'm here to help you guys, right? But yeah, with that being said, again, thank you guys for the love and support. Appreciate it. We'll be back live again here on YouTube on Sunday. Next week, let's go actually look at the news real quick. I don't know if I like that. Okay, we got FOMC, CPI, and NFP this month. Which one do I want to do? It's interesting, back-to-back Mondays and Tuesdays that we have no news. Yeah, I'm not sure which one that I want to do. Well, I'll decide which week I want to do the everyday live calls. I'll make sure I let you guys know. I'll announce it. It'd be very obvious on Instagram, on YouTube, in the community tab. I'll mention it obviously in the live calls as well. But it'll be one of these weeks. So I'll decide probably after this week which one I want to do. I like CPI better than FOMC. So we'll probably do CPI. CPI, FOMC is really late too. I don't really want to be on so late. Yeah, so next week we'll be live every single day on YouTube. Basically the same way that I am with my private group. So I'll show you guys how that goes. And if you're new here, I think you have a good experience, especially if you like this call and the Sunday calls. So yeah, I'll announce that more as we get closer. But again, thank you guys for supporting the channel. Don't forget to like the video. If you guys got questions, let me know. And I'll see you guys on this Sunday. And those of you in my private group, I'll see you guys tomorrow. But yeah, let me know if you guys need anything. But God bless. And yeah, I'll catch you on the next one.